cornflakes.
Beware, scammers are getting smarter, and with mobile money and digital payments, it's easier than ever to fall for a fake deal. Don't get caught. Before you send money or invest, make sure you're dealing with a licensed financial service provider. Protect your money. Stay alert. Be a smart investor. This message is brought to you by the Securities and Exchange Commission, protecting investors in the capital markets.
Hello there, welcome to another episode of Money Mysteries. We'd like to thank you for always being here with us, where we're going to be focusing on something very interesting. But do remember that you can be part of the show by simply joining us via our Diamond TV Online Facebook page. Something that you can do as well is tune in to DSTV channel 271 and GoTV channel 20. Right here on these platforms is where you can catch the Money Mysteries. Episode 4 is what you are tuning into. Welcome to it. My name is Justin Mulenga. Now, the Money Mysteries television series is a flagship investor education initiative developed by the Securities and Exchange Commission as part of its mandate of investor protection and market development by promoting financial literacy as well as market confidence. Now, the series is designed to simplify complex investment concepts and address the growing need for public awareness on prudent financial management and fraud prevention. Today, episode 4, we are examining crypto scam risks, neutral blockchain technology exploited by malicious actors, the lure of high-yield promises to youth via social media, as well as regulators' role in licensing, audits, and investor education. And one of the things that we're going to be doing is discussing that in detail with our guest in studio, Mubanga Kondolo, who is the Securities and Exchange Commission Assistant Director, Market Development and Projects. Mr. Kondolo, thank you for joining us and welcome to the Money Mystery Show.
Thank you, Justin. We're glad to be here with you at Diamond TV. Good evening.
Indeed, welcome. And I'd like to start off firstly by getting into a quick recap of episode 3. Very insightful, very engaging one. In fact, if you ask me, I think that one of the things we'd like to do now is do exactly just that, recap on it and talk about a conversation that was centered around diversification. Yeah. Let's talk about that.
Okay, so basically, if you did follow the previous episode, it's essentially trying to introduce, first of all, the type of capital market products that we have, and particularly looking at the collective investment scheme as an essential vehicle that more or less provides, options for diversification, investment diversification. And when we speak diversification in capital markets, it's an important concept because essentially what you're trying to do is de-risk your investment. There's the adage, do not put all your eggs in one basket. And that is what the CIS structure tries to do also by providing different asset classes where you can have a balanced fund, for instance. Of course, it also has other opportunities where you can categorically choose the sort of investment that you want. For instance, you may choose to have an asset class of just equities or bonds, or you could have a mixed asset class of equities and bonds in real estate, thereby, providing that diversification opportunity. And also beyond that, there's aspects around dealing with the regulated financial service provider, which in essence, the SEC does play a major role by licensing capital market operators who also now deploy products that are taken up by the various people.
Right.
And related to what we're going to be discussing today, episode 4, I think it tries to build into the next episode from there. You can see a lady using a phone, and she's tracking her investments using a phone. Even though no aspect of the phone was mentioned, but we're trying to communicate in a subtle way in episode 3 that you can actually now, participate in the capital markets using mobile phone,
right,
in essence.
Well, I love that you talk about the aspect of spreading your investment, across within the capital markets, and that's just, it's brilliant, and it's a diverse way of having to deal with things. But let's get into in detail now this topic that you have briefly, brought up, and this is with regards to examining crypto scam risks. Firstly, just help us understand really what this topic is before we delve into it in depth.
Okay. So, of course, the episode chooses crypto as a digital service that is popular in our country at the moment. But the idea is to speak to digital assets that are being promoted by various financial service providers, those that are licensed and those that are unregulated. So it also just tries to emphasize that there are potential risks that emanate from platforms like crypto. Crypto, in essence, is not holistically bad. It's not entirely bad. But we have also bad actors who are taking advantage of, people with low literacy levels, low digital literacy levels, to be particular. And they know that they can easily lure those kind of people to invest in unregulated platforms. And we see them falling short, because they have predatory practices, these unregulated schemes or frauds and scams, and essentially looking out for people who have low literacy levels and can't protect themselves, in essence.
Right. Yeah. And you use this word crypto, maybe for the sake of our viewer. What exactly is crypto? Is it a currency? Is it a product that somebody can buy? Help the viewer understand what crypto is.
So the crypto is basically a digital platform where one can access virtual currency. And I think the common currencies that we know so far, like currencies like blockchain, Ethereum, and once you access those digital assets, you're able to either buy and sell the assets. You can trade using the assets. We have in more advanced economies where you can use the digital asset or the cryptocurrency itself, which is virtual. Virtual in the sense that it's not fiat money, it's not physical money. You can't see it. It's seated on the cloud, and you can actually use that currency to buy goods and services. So we see that advanced countries have gone ahead and pretty much adopted it as a means of transaction, as a means of transfer, value transfer.
But obviously this can only be done if there's a broker in between yourself and the market.
Not in essence. For crypto, the crypto space eliminates the need for a broker.
Right.
So you're interfacing directly with the buyer on the other side, and likewise buyer interfacing the seller on the other side.
Well, let's get to take a listen to this video because majority of our conversation is centered around this film that was generated by yourselves, the Securities and Exchange Commission. So let's quickly take a listen.
Hi, Chipo.
I've been trying to call you.
Oh, yes. I've been busy.
Busy doing... Viti. Why you on a boza yako ka? Why you on a boza yako? Sometimes you come to be sorry na iwe.
Okay, sorry. Hey, and bunch of
because have you heard about these new crypto platforms that are promising great returns? Everyone's talking about them.
Oh, yes. But I think it's too good to be true. I mean, we need to be very careful.
Yeah, but this could be our chance. Imagine what we could do with this. We could travel, we could buy that G-Wagon, we could start our businesses.
Relax, okay? I've been doing research about this and it's very dangerous, okay? It can be dangerous in the wrong hands. We need to be very careful because there are scammers everywhere and they are targeting young investors like us.
You worry way too much. I think you're just a little bit paranoid. Listen, everybody's making money off of it, so why shouldn't we?
I just don't trust them.
That's on you then. I trust them and I know what I'm doing.
We need to do more research.
Okay.
And okay. Yes, you pull. Ha. Hey, stay calm. Did you take down any information? Can you contact anyone? Oh, relax. I'll be there in a bit. I'll be there. Relax.
Watch out for the next episode. This movie is sponsored by the Securities and Exchange Commission, the regulators of capital markets in Zambia.
A short film there that is speaking into crypto scams and the hazards it comes with, especially if you're not attentive to how you're engaging on these crypto platforms. And in studio, we do have our guest here in Mr. Kondolo, who is just helping us understand further and breaking down, examining the crypto scam risks here. So a very insightful clip there. Yeah, if you take a listen, one of the things that is being talked about is a crypto platform. But let's talk about these crypto platforms, in detail. What exactly are they? What is it about it, and how does it work for one to be able to have access to some of these crypto platforms?
Okay, so basically, it's an alternative finance platform, like earlier introduced. It is a digital system, a computer system, which houses virtual currencies. There's thousands of virtual currencies that we have now, Bitcoin, Ethereum, and also that extends to other types of digital assets like stable coins and the like. So outside the normal fiat system that we have, the same way you would, be able to transact on a mobile money, using the virtual money that you have. You can't see it physically, but you've got money and you can transact. The same way you can, access cryptocurrencies through the crypto platform, which is promoted by different promoters like Binance, which are more common. And there's also Yellow Card, for instance, which participated, which is still offering some sort of cryptocurrencies in Zambia. So basically, the process also is digital. You can provide your KYC documents through the platform. Traditionally, we had to have physical copies as we open our bank accounts, but now these platforms have integrated technology systems, and the KYC system is also being done in a digital way. So you see that there are some benefits associated to crypto platforms in terms of leveraging technology, which is housed on a blockchain infrastructure. And the blockchain infrastructure, in essence, is decentralized. So it also necessitates transparency in a sense that whatever transaction is done on the blockchain system is traceable and cannot be tampered with. It can be reversed. So it has extended to a lot of services. We now see title deeds, for instance, being able to sit on the blockchain system, which the crypto sits on as well. So I think in a nutshell, that is what the cryptocurrency is trying to do, to provide an alternative finance ecosystem aside the one that we know, the fiat system.
Right.
Yeah.
Let's speak into how one can determine what is considered a genuine crypto platform, because in that very clip, the male character is telling the female character that you need to be careful in how you're engaging on a platform like this. But help us understand what is considered as a genuine an authentic crypto platform?
Yeah, I think a critical step for one to undertake before investing is to do your due diligence. You know, we call it CDD, customer due diligence. You do your research, and while you're doing so, you need to ensure that the platform is being promoted by a licensed player. Of course, in Zambia, we don't license, but we see other jurisdictions having bodies that more or less regulate the activity of these crypto assets. And most of them that are being promoted here in Zambia are actually sitting outside. So it is essential that one, does research, makes sure that the platform that they're about to be onboarded onto is regulated in one way or the other. Because what that does is that it shields you from potential loss. And when you invest through a platform that's not regulated, there's very limited, recourse mechanisms in the event that you have a complaint, in the event that you need a proper dispute resolution mechanism to be undertaken. That lacks. And in most times, people are lured into onboarding themselves onto these platforms because of the seemingly high returns that are offered. I think you saw the lady there getting excited about the G-Wagon and the like, which is common to a lot of people, right? And these scammers and fraudsters know very well that, most people are greedy. And that greed overshadows us to have proper judgment. And we rush into, placing our hard-earned monies into these platforms at the detriment of, of ourselves.
Right. One of the things that we know for a fact is that with regards to technology, Zambia is still in its infancy, and there is a long way to go before we get to a certain threshold or get to a level that is as advanced as the Western world, But one of the things I'd like to ask is how common, are scams, especially when we talk about crypto platforms here in Zambia?
I think I would say the risk is quite high, and the prevalence is also high. From the Commission, I think we've had to issue out, we have a surveillance team, surveillance office, and also, working closely with other law enforcement agencies. We see this trend happening quite often, where people are influxing, first of all, complaining that they invested in ABC, platform, and they tried to access the platform, and it's just essentially not there anymore. They can't find it, and they have nowhere to go. They go to the police. The police also can do very little to help because it's not a regulated product. So I can say that the prevalence is quite high, and it's still on the rise. And also that can be probably attributed to the levels of literacy that we have in the country. Launched. And if you look at our literacy levels, they are now at 40% or so, which is an improvement. It's a good thing in a sense that it's an improvement from the last 5 years, where we had 23%, so about half of what we have now. But it's still a low number, and probably indicative that there's still more that needs to be done. And it is from there that people need to be more wary and cautious with who they deal with. I think it's just essential that you reach out to people that know better, in a sense that we have licensed financial advisors, investment advisors, who can point you towards regulated products. Yeah.
While you talk about some of the things that you do to sensitize and inform the general public to stay clear and be aware of some of these scams, do you deliberately also engage international entities that are equally involved in wanting to curb the growing concern here, and that is around scamming with these crypto platforms?
Exactly. So before I even speak to the efforts that are being done in collaboration with other partners, of an international nature, the first line of defense that we say is you and me. So starting from home, our efforts are on investor education. And I think the Commission does run, a number of investor education programs to that effect. We have tailored programs that are targeting children in schools, youths, as well as adults. So we have debate competitions every year, essay competitions, just to spur, a discourse around the subject matter, because we know that once there is discourse, people are more aware, through the research that they need to do, and so on and so forth. We have the monthly town halls, for instance, which are virtual, open to everyone, Facebook, Zoom, and we've seen a lot of participation on those platforms in excess of 75,000. On a yearly basis. And we are confident that once we have, a cadre of people that are aware, they are able to defend themselves. Now, speaking to international collaborations, the SEC is a signatory to what we call the IOSCO, the International Organization for Securities Commissions. It's basically a standard-setting body for capital markets authorities worldwide. And primarily it sets standards on various capital markets related issues, one of them being consumer protection. And the collaboration is, I think, foundationally anchored on, the need to share information with one another. So the US SEC and the Zambia SEC collaborate on various matters. If we have a suspect, for instance, who has defrauded a Zambian citizen licensed by the US SEC, and if there is scope for them to assist, they do help through those platforms.
Right. Yeah. Is it true that one who invests within these crypto platforms can make a return on this investment within a short space of a time? I know that when we talk about the capital markets, it's a bit different when you're expecting return on your investments, which are always considered long term. But with the aspect of fintech and crypto platforms now, is it true that one can make a huge return on their investments within a short space of
It is true.
time?
It is true. We've seen people become billionaires overnight, but also, high return. The higher the return, the higher the risk. The crypto space is a highly volatile, industry. You can lose that billion that you've made overnight also. So it is also possible, that you can earn good money in a short space, but you can also lose it as quick as you earned it. And it's made worse now because, fraudsters have seen an opportunity there to say, okay, there's regulated platforms that are able to offer these high returns. So I can also, create a fake platform and offer the same sort of returns.
Right.
Get 100%. Give me 1,000 kwacha today. In 2 days' time, you're going to have 20,000 kwacha. So they're just playing to, people's greed, for lack of a better word. And, people end up falling short because of that.
Right. Well, you're watching this episode of Money Mysteries. We are focusing on examining crypto scam risks, and our guest in studio, Mr. Kondolo, from the Securities and Exchange Commission, who is Assistant Director, Market Development and Projects, is joining us to help us understand more about this and why you should be taking precaution even as you're engaging on these crypto platforms. After the break, we are going to be opening up the phone lines, and we'd like to hear from you as well. If you have any pressing questions with relation to the topic at hand here, Mr. Kondolo will be able to respond to just that. But for now, let's take a quick break. We'll be right back.
family has always been a generation of dreamers. That's why when I saw how my little boy loved to play with kites, I knew it was time to stop dreaming and start investing towards a reality that would make my son's dream to fly come to life. When it comes to investing, it doesn't matter how small you start. What matters is that you start. Because I invested in something long-term, my son is no longer flying kites.
Good morning, passengers. Welcome aboard this flight. I'm your pilot for this flight. We have got taxi and we'll be taking off in the next few minutes. Thank you.
Money grows. Be a part of the generation of future investors by investing in stocks and bonds on the Zambian capital market. The Securities and Exchange Commission, protecting investors in the capital market.
Welcome back. In case you're joining us, this is Money Mysteries, a series that on this episode is focusing on us examining crypto scam risks. And I do have my guest here in studio in Mubanga Kondolo, who is the Securities and Exchange Commission Assistant Director, Market Development and Projects. He's joining us to delve deep into this conversation. And one of the things that I would like to now get into as my next question, Mr. Kondolo, is related to benefits. I do believe that there are some benefits when we talk about financial technology. What can you tell us about this?
Exactly. I think we've spent quite an amount of time speaking about the downside, but of course, fintech has many associated benefits with it. I'll start with financial inclusion, of course, something that I've worked closely on the past few years. We've seen that the advent of financial technology has, in essence, been the number one driver of financial inclusion. You know, we are celebrating more people coming on board today because of mobile platforms through the smartphones, even through platforms like the USSD, where they can access different products and services, savings, investments, insurance, and so on and so forth. So it necessitates for financial inclusion at scale. Right now we're seated at about 80% in terms of the financial inclusion rate, which has risen from about 69%. So in the past 5 years, we've seen that good progress.
Right.
And we've also seen that it can potentially lower costs in a way that you can do things in your comfort zone, at your convenience. Traditionally, we had to drive long distances or get on a bus, so factor in transport costs to go and access your funds at the ATM and so on, to pay your utility bills. You had to travel long distances. You had to, stop doing important things just to attend to such tasks. But now we can see that because of that, we're able to transact on our mobile phones. Even it's now extended to investments, savings, insurance. I think when we started, we were only appreciating it for transactional sort of arrangements to pay for your utilities. And we also see that there's greater efficiency in the sense that you can transmit your monies in a relatively short time, most likely, most of the time in real time. I'll be in Kaputa or Shangombo, and I'll be able to get money from someone who's all the way in Porokoso, where I come from. User experience, when you look at user experience, that is something that also sort of spurs competition and innovation in the ecosystem. Because if you are X MNO, Z MNO, if I see that your service is able to capture a good number of people because of the user experience that they have. You know, the fees that are associated with using your platform are not prohibitive. I'll most likely be inclined to, you know, improve my platform as well. So it does create, I think, a good space for competition and innovation. And coming from a capital markets perspective, we've seen also that the advent of fintech has introduced novel and innovative products, if I may say, like crowdfunding platforms, for instance. So those are basically now broadening, you know, economic participation because more people can invest through such platforms. Traditionally, you would expect maybe affluent people or institutional investors to participate, but now we see that even sectors like the SME are able to raise monies through crowdfunding platforms, which are basically enabled by technology.
Right.
So I think ultimately they do have benefits which point to broader economic participation and basically contributing to the economy at large in a positive way.
Let's talk about regulation, especially within the fintech space. One would ask this: would you say that Zambia has improved regulation around things like transactions that are done on the digital platform, but obviously these transactions being in form of money?
Yes, I think generally we have a robust legal or regulatory environment from a payment systems point of view, which probably every fintech needs. We have the National Payment Systems Act, Payment Systems Act under Bank of Zambia, which was recently revised. And also beyond that, we have our respective prudential supervision mandates, market conduct mandates for the SEC being a market conduct regulator. And to promote also innovation, we've seen recently the three financial sector authorities issue regulatory sandboxes, which are essentially meant to you know, promote innovation, ingenuity, but in a way that allows for, you know, regulatory flexibility, and also allowing the regulator, first of all, to understand how these products are being developed, how they will be deployed to the market under a specified rules over a specified period of time. And we see that that also helps to perfect models that may not necessarily be ready for commercial deployment. And that process helps to refine the product and give confidence of both potential users and the regulator to deploy them commercially.
Right.
So we've seen Yellow Card, for instance, from the Bank of Zambia point of view, try out cryptocurrencies. From the SEC, we've had P2P platforms participate in our regulatory sandbox.
Yeah. I'd like to go back again to, you know, crypto scams, and because this is pretty much what we are discussing on today's episode of the Money Mysteries. Let's speak about young people and how they seem to be particularly targeted by crypto scams and other, you know, digital financial platforms. Is this true? And if that's the case, why is it so that young people are mostly targeted?
Yeah, I think it's more to do with the technology survey aspect side of things. We know that youths are probably the most active, the Gen Zs, when it comes to using technology, social media, and sometimes we see frenzies, you know, being celebrated, and one can easily get caught up in those frenzies. We see sometimes influencers promoting certain products. To give an example of betting, for instance, you know, which is common when a celebrity endorses betting. We also see that that can potentially be extended to the investment sector as well. So we tend to see that from those trends, predators are also able to jump on those opportunities and basically prey on the youths, being a large target group that is actively using digital platforms.
You say that our financial literacy levels are roughly around 40%, but
Yes.
if the most targeted are young people, then who makes up this 40% of individuals that have financial knowledge?
It's a mix. The age group that is most literate, between 25 to 35. And we see that below that we have the youths. Of course, they'll still fall within the 25 to 35, but below that segment, 16 to 25. So we see that those literacy levels for that group is not as high as the 25 to 35.
Right.
But also to say that the older generation also tend to have digital literacy and are also a key target group, not because they are active, but because they lack
the knowledge.
Yeah.
Let's talk about the possibilities of one getting back what is lost if they invest in a fraudulent crypto platform. Is it possible that I'll receive back what I have lost if I report this to the relevant authorities?
Yes, of course. There are still redress mechanisms, especially if it's housed locally. It makes it easier to make these follow-ups because we have other law enforcement agencies that have the mandate to oversee such fraudulent activities. Of course, we work collaboratively with other law enforcement agencies, Zambia Police, DEC, Anti-Corruption Commission, our core regulators, Bank of Zambia and PIA. And we've had case studies or use cases in the past where we've apprehended these schemes pretending to be regulated. In essence, we had Heritage Coin, for example, which amassed quite a substantial amount of money very short space of time, in excess of 30 million, and people were able to, get some of the monies back. Not in full, but I think they still got something back.
Right.
Yeah.
And now moving on to my next question here, and it's related to how young investors can balance optimism about crypto and other fintech platforms with prudent caution. Obviously, we have talked about so much with regards to the negative side of this, and I would like to understand where one can now implement optimism and balance as they get into wanting to be part of some of these crypto platforms.
Yeah, I think one must come to realization that it's not always that you have to make quick returns in the shortest possible time. From a capital market standpoint, we like to say capital markets is for the long term. Start small, and it should be a long-term journey. The idea is to build wealth over time, and we have an opportunity that is providing regulated investment platforms in capital markets and other subsectors of the financial sector as well. So I think it has to start from there. And also, one has to invest in investor education because basically when you start doing that, you start opening up yourself to information that would be relevant and beneficial for you to navigate the investment journey. You'll be able to undertake proper research. You'll be able to do your proper due diligence. Just a phone call away, you can call the SEC and find out, is this platform regulated? You can go to the website and see the list of capital market operators that are licensed and providing regulated products. So I think it's a mix of things, but ideally one has to be able to take a step back, be ready to invest for the long-term trajectory, build wealth over time, do proper research by opening yourself up to learning, investor education principles and so on, and also get the necessary advice from investment advisors, financial advisors, whatever the case may be.
How many Zambians are opening up now to investing within fintech platforms. I would like to ask this, and this is whether you have received a number of reports from people who have been scammed from specific crypto platforms. Is there, from the top of your head, one that you can talk about that people need to take precautions even as they get to invest in this?
In terms of an unregulated product?
Yes.
Not one that I can share from the top of my head, but I know that Zambians are actively using digital platforms. We have now over 1.6 million people that are actively investing through a digital platform in collective investment schemes. So I think that is just indicative that there is a huge demand, for these products, and it is possible for people to still make, a meaningful return using regulated products.
Right. You talked about much earlier on, the different messaging that you're pushing out, especially within the communities here in Zambia, and just informing them about how they can understand and be a part of taking precautions within this digital space. And you've said you're engaging young people. Help me understand what the reception has been like from these messages you have sent out into the communities. What sort of feedback are you receiving as the Securities and Exchange Commission?
No, it's been our outreach program has been quite significant. It's been massive. I think we've reached over 2 million people, which we track through our social media channels. Of course, it's a mix, but largely speaking, we see a high level of interest for people to learn more. We are always getting queries on how people can participate more. We have in the past managed to also formalize our relationships with different stakeholders. When you look at the youth, we have working arrangements with a lot of associations, Unsabeka, Mwewa at Mulungushi, the Student Association at CBU across the country. We also have, through the demand that we've received, been able to forge programs like the Capital Markets Ambassadors Program, for instance, because we realize that the Commission cannot probably disseminate investor education on its own. And looking at the vastness of our country, we need to engage people in various provinces as well. So that is what the Capital Markets Ambassadors Program seeks to do. We educate them. We provide, a capacity building programs of an international standard. And also now we're rethinking also of extending it to our local standard, the stockbrokers course, which will support efforts of the CISI, Chartered Institute for Securities and Investments, introductory course to investment. So I think it's through those programs that we see more stakeholder participation, and also as a means of promulgating the investor education to a broader group.
This is one way that you are obviously protecting the general citizenry as a regulator.
Exactly.
But let's talk about the role of regulators, and in conclusion, what role they are playing in ensuring that they're also protecting the investor.
The regulator?
Yes.
Okay, so I think primarily our mandate is investor protection, to summarize it all. And we do that through our supervision function, which is regulation in a sense that we license entities that provide services, and they also have to play by certain rules. They have ongoing obligations. They need to report to us on a quarterly basis on how their entities are performing, how they are handling complaints, and so on and so forth. And on the other side, our function is investor education. We are actually mandated by law to provide financial education and also provide capacity building programs. So in summary, that's how I can say the SEC is protecting investors. It's through our mandate,
right.
Supervision and investor education.
Well, Mr. Kondolo, we'd like to thank you for joining us on today's episode of Money Mysteries, and we're hoping to get to discuss more right here on the show. Thank you for joining us.
Thank you so much. It's been a great pleasure.
Indeed.
Hope you have us back.
Thank you.
Very soon.
That's our conversation there with Mr. Mubanga Kondolo, who is the Securities and Exchange Commission Assistant Director, Market Development and Projects. Our topic centered around having to examine crypto scam risks, and quite the insightful chat we have had. But remember that you can catch this Money Mysteries series every Thursday, starting at exactly 17:30 hours. My name is Justin Mulenga. Coming up at 18:45 hours, we have our news bulletin. That is at 18:45 hours. Good night.
Beware, scammers are getting smarter, and with mobile money and digital payments, it's easier than ever to fall for a fake deal. Don't get caught. Before you send money or invest, make sure you're dealing with a licensed financial service provider. Protect your money. Stay alert. Be a smart investor. This message is brought to you by the Securities and Exchange Commission, protecting investors in the capital markets.